Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
All right. Hello, this is Tim Fergestad. Thank you for joining us. Michael Rebelo is a 20-year-old founder of Ever Forward Capital Partners, helping everyday investors build long-term wealth through multifamily real estate. Michael, welcome to the show.
Tim, always a pleasure. Thank you for having me on.
Yeah. You're still down in Tucson. Is that correct?
That is correct.
All right. How long have you been there?
So we moved out here. Oh, goodness. In fact, this October, it will be 2 years since we moved from the East Coast from Massachusetts.
Okay. So this is your second summer. How's this one shaping up?
Warm, really warm. I mean, last year it was pretty intense. I think last year it was like 116 here because we're up in North Tucson. And it's like, holy cow, we weren't expecting that, but I'll take it over the humidity any day.
Yeah. Okay. That people don't understand that who haven't been through it, but
no, they don't.
They joke, oh, it's so dry. Yeah,
it is, and we'll take it.
That's right. All right. So, gosh, you have a very neat story. I mean, you've entered real estate at a much younger age than most people.
Yep.
What convinced you that multifamily investing was sort of the path you wanted to pursue?
Yeah, that's a great question. Of course, I'm a strange anomaly because, especially with my age, you expect people to be in the industry for 20 years, not start at below 20. So it all started actually from a severe pain point that actually became our greatest value play. So when I was in high school, I was learning about financial literacy, entrepreneurship, and business development. It always
Where and when were you
eye.
doing? How are you learning about that? You didn't have like Wealth 101 in high school, did you?
No, we had like electives where one of them was like business finance, and I was like, oh, that sounds cool. Let me register for that. And it was like, like half a point or half a credit to like your graduation credits, whatever it was. And I was like, yeah, I'm going to try that. And this was actually during the COVID lockdown when they're still doing remote learning. And I was like, what, let me just sign up for that. And I did. And it caught my eye because I'm like, wait, you can balance finances. You can have money, make money for you while you sleep. Like, whoa, that sounds pretty cool to me. So I thought it was interesting. So it caught my eye and I kept going on this bandwagon of, financial literacy, entrepreneurship, marketing, business development, trading stocks. And so that carried on to sophomore year and then junior year. Between those 2 years, I later figured out how to invest in the stock market, the S&P 500, how to, analyze businesses, how to become a marketer, how to, start a business, how to balance a budget and finances and stuff like that. I'm like, this is really cool. So during summer vacation, I think it was around summer vacation, either that was just the start of it. I'm at home and my mother, she goes out for a little bit and I'm sitting in the living room and she comes home and she's like, hey, we need to talk. Now, at that time, I was 17 years old. I'm thinking I'm dead because when I hear those words, I'm like, that's not good. I'm like, what did I do? So now I'm going through the Rolodex of what I possibly could have done. But it caught me off guard because she was like, hey, I want to teach you about the 2008 crash and also where our finances are at right now. I was like, sure, like caught me off guard. And I was like, all right, let's have a conversation about it. And she proceeded to tell me, we got severely hit in 2008, number one. And then number two, some of our bank accounts, like, that were accruing interest, like, your CDs and your 401k, IRA and everything like that, they weren't keeping up to the standard that we wanted them to. And in fact, our money was being eroded from inflation and all of that price increase. I think the consumer price index too, just wedged that in there. And I was like, so you've been working all this time. We've been saving all this time. It's basically not even keeping up anymore. In fact, now retirement's a question mark. That was literally the conversation we had. So I'm like, well, Mom, I'm learning how to invest in the stock market. Let me dabble in that. Like maybe I can bring some money to the table. She's like, okay. We pulled together a little bit of funds. I think we started around $500 just to make headway. Opened a Fidelity account. And my life was as follows: Yahoo Finance, Schwab Network, Market Watch, and Bloomberg. Because I was watching from market open to market close to day trade. I did that for about a couple of months. I made some money, but it wasn't anything conducive. It wasn't anything I could scale. And not only that, I didn't have a mentor or the resources to do so. I was just doing what I had from high school. So we went back to the drawing table and we're like, you know what? This isn't going to work. to cut the story short, we looked at all kinds of investments we wanted to passively invest in because we couldn't actively manage anything, being a landlord and everything else because mom had a full-time job still. And not only that, I was still in high school, so it wouldn't work. So we're like, we have to go the passive route. Later, we figured out that, when you see an ad on Facebook to invest in these apartment complexes, which we thought were owned by the banks and BlackRock, the Waltons, and everything else, it was like, oh, wait, it's average people like us that can own these. But we realized that you have to be accredited if it's published online, and we weren't accredited. And we're like, okay, back to the drawing board again. But we later figured out that we can actually develop teams and learn how to purchase these on our own, how to pool resources together like funds, pool investor capital, build a team, and actually run this thing like a legitimate business. When we figured that out, we were like, you know what? It might not be passive, but eventually that could be the passive route we want to take. Right. And that's what happened. It's like we got with that click. We wanted to help people. We just wanted to do something with our money to have it make money for us. So we're not chasing the dollar. It's chasing itself and making money for us. And that's really how we got started in multifamily. And then I guess the last part of that was when we were starting to learn firsthand, it was like, okay, we want to make money, but there has to be a legitimate reason behind it. Like, what's the why? What caused us, and specifically me, to go down this path of multifamily, buying these apartment complexes? So I'm sitting there, I'm thinking, I just don't want money. There has to be a bigger mission behind it.
What are you going to do with it?
Yeah. And I looked at my mother. I'm like, you know what? I know what I'm going to do. And she's like, what? I'm like, I'm going to retire you. And she's like, really? I'm like, yeah, I'm going to retire you. I mean, you've been working way too much, number one. Number two, you've been doing everything right and it still hasn't caught up. You've been saving, you've been balancing your budget, you've been doing everything else, you've been checking your bank accounts, you're being the good steward of your money, but it's not repaying you as it should. So I'm going to retire you early and more securely. And now that you get to enjoy a little longer. And she's like, I'm not going to complain with that. I'm like, I hope not. So it then evolved from retiring my mother, which fast forward about 2 years ago, she stepped away from her W-2 this past February to join forces with me, Never Forward Capital Partners, which is our company. And now I'm trying to help other people just like her through multifamily because that's the route we chose. And I want to keep telling the story and our story of how we did it and how other people can do the same. Long story short, that's how we got into multifamily.
Okay, very cool. I was sort of different. I mean, I was actively doing real estate, but I wasn't multifamily. I was passive. I was investing in other people's deals, and I started realizing these are much better than my active deals, and I'm getting a much better return on my time and my money. So that's kind of why I pivoted into them more. But I'm on property management calls and asset management calls and stuff. There's a limit to how many of those I can be on every week and stuff. So
that's true.
But I kept getting more and more active because people wanted to learn more and start sharing it and educating. And so that was a good fit for me. So I've worn all the hats, which is educational, but it's just not scalable. And it's just not where I'm at in my stage. So you've helped oversee about over 200 apartment units, and you've raised millions of dollars now. What did your actual role involve? What was your actual role in those projects?
So the first deal that we joined was purely by accident, and I'll explain why. Because the team that we reached out to is, in fact, in your neck of the woods with Cindy Harding. They're up in Surprise, Arizona.
Oh, yeah.
And, they offered this deal to us. We've known them for a long time, and it came through an email.
Are there deals in Arkansas?
They have a lot of deals in Texas, and I think in Oklahoma as well.
Oklahoma? Okay. They got hats. They wear hats.
That's them. Yeah, I think they're formerly like the Outlaws, and now they're like high caliber multifamily. Yeah.
Okay.
They're fabulous people. They're great. But anyway, we were in a phase the beginning of last year where I was deal hunting up the wazoo. I was looking at Indianapolis. I was looking at this place and that place. My mother being the queen of no and strict to the buy box, she was like, no, 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 no. And I called her the queen of no. And then this deal came across our desk and I'm like, hey, it's in Tyler, Texas. And she's like, well, no, because it's out of our buy box. I'm like, well, it's a 3.2% fixed assumed rate. And not only that, it's with Cindy Harding and crew. And she's like, now you got my attention. I'm like, good, let's take a look. So we looked at return metrics. We booked a call. We weren't liquid at the time, but I wish we were. And we we're like, we'd love to tell people about this. And we'd love to share because the return metrics are great. And this is like once in a lifetime deal with this kind of a rate. It's perfect. I mean, it's incredible. It's fixed at 3, below 4, and you can assume it. It's like, yes, please. That's like a huge golden nugget. So when we got off the call, we were like, we don't know how to raise any capital. Like we have no idea. We had no idea how to do it. We had no experience of doing it. So we're trying to figure out, like, our first pitches were rough, and we were like, hold on, wait a minute. Why don't we just sell it as an opportunity? Like, not even like to say, like, hey, invest with us. Like,
Right.
this, we just want to raise awareness about this opportunity, which we went from capital raisers to awareness raisers. Like, hey, this is a fantastic deal. These are the deals we look at. This is the amazing team that we're partnering with. If you're interested, please let us know. Little did we know, we raised over $500,000 for that deal just from sharing it to our network,
Right.
to go, hey, listen, this is an incredible deal. I want you in on it. You have the choice to or not to invest, but
Right.
I would feel remiss if I didn't share it with you. And we joined their team by bringing money to the table and also helping them with the asset management. Of course, not having a lot of asset management experience, we're learning tons with them. It's like,
Right.
whoa, like, it's the best way to learn real estate is to do real estate. That's the best way
Mhm.
I could put it. So
Right.
mom and I are helping on the social media aspect of, what the reviews look like. How does it look like on the, I guess, social media end? Like, does the property look good? So we're handling that. We're helping them with the asset management and some tasks as well. And we're just learning tons of it. The second deal, we did the same thing, did the same process, brought money to the table. In fact, that's with Jay and Tana Borsma,
Oh yeah.
fabulous couple. And that one's in Oklahoma. That one's 64 units. Tyler was 152. And it was just doing that again, just raising awareness to say, hey, we've got an amazing opportunity that we're working with. We'd love to have you on it. Even if you invest or don't invest, I would feel guilty if I didn't share it with you, because we want to share opportunities that make sense, that yield good returns and have an amazing team behind it. So that's really how we just got into these deals, was just figuring out what is the best value that we can give to people. It's just raising that awareness to go, you can invest in these and
Right.
with an amazing team, and it's not Wall Street, which is even better. So
Right.
yeah.
And you pointed out your partners on those deals, which is really important because a lot of people, being a younger entrepreneur, be saying, "What's your experience? What's your track record?" And that's what's great
Mhm.
is you can say, "Well, good news, right?
Oh yeah, absolutely.
The leads on these
And learning
projects have
from
a lot,
them
right?
and learning from them has just been invaluable, because between the collective experience on these teams, it's just immeasurable. They come from all different backgrounds, but yet they're still in the same industry, which is multifamily. And you're learning all these different perspectives. How do you handle evictions? How do you handle payroll? How do you handle P&L? How do you handle the underwriting? And it's great to watch it on YouTube, to listen on podcasts, but when you're in it, it's a whole different beast. I remember the first couple of calls we were on, I was like, this is overwhelming. Like, I need a break. I need to open a window to get some air. But as you start to get more in these calls and be present and ask questions and connect with team members offline, you start to really learn how these apartment complexes really work. Like, it is a full-fledged legitimate business. And now it's like, from the first deal, we didn't know anything. Then the second deal, we're like, we know something because we're learning from these people. And then the third deal, we're going to get more experience. The fourth and the fifth and the sixth, the law of the first deal. The first deal is always going to be the hardest. So yeah, it's the learning, the experience, and being moldable is very important when you come to your first deal.
Right. Okay. You mentioned working with your mother, Mariana. What she kept saying no because it wasn't in the buy box. Just why don't you share real quick what the main criteria are or were for your initial buy box?
Absolutely. So my mother is as pragmatic as they get, which is a lifesaver for this company, because I have terrible shiny object syndrome. If I see a deal that's got good metrics, I'm like squirrel, I'm going for it. And she's like, no, it's in Indianapolis. We're in Tucson. Let's try to condense it a little bit. I'm like, okay, fine. So it's important to have a partner that can help, steer you, because she is the financial business person, pragmatic side. I'm the visionary that can see the end result, but I don't know the rest that gets us there.
Sure.
She
That's a
does.
good compliment, right? When you have somebody
Absolutely.
who's getting you out of your comfort zone, the other person bringing you back.
Yeah,
Yep.
it's like you need to find partners that complement, your strengths and weaknesses. I always like to say you need to find people that have your weaknesses as their strengths. That's the biggest thing. That's the biggest point of leverage. But anyway, our criteria, it started very small, like, the generic, 60 plus units, 1980, light value add. But then it got really specific. It was, 1985 and up, 100 units plus. It has to reach like a cash flow metric of, I think, 6% more. It has to be in these are the schools, this is the crime rate, this is that. Like we got really specific when it came to deals. Does it check all these boxes? Kind of like a little mini Neil Bawa course where it's like, we want to be specific because we don't want to just buy a deal just to buy a deal. We want to buy the right deal to have something where, of course it's going to have risk, but what does the risk look like? Is there a lot? Is there less? Is there room for improvement? Does it match what we can handle? Like if it's too much value add, we're not going to tackle it. Our partners like to do light value add. So do we. We're going to tackle those. So the buy box really was kind of a point of leverage for us to say, basically like a filter where you can go like LoopNet and Crexy and CBRE and Cushman and Wakefield and everything else to kind of put that in there. And now you can start sifting through deals. And when you get more specific, you can be specific with your partners. Therefore, you get specific deals. And therefore, once you get specific deals, you can use those as examples to send to your brokers. So specificity really was the back end solution, especially for my mom, because when she figured out that buy box and when she built it, because she's very specific, it was like, that was it. And it came out and worked. But the funny part is we want to stay in the Southwest, i.e. Phoenix and Tucson. But given metrics, it's not really conducive for multifamily yet. We're starting to see some progress though. Besides the location, the two deals that we are working on right now pass those metrics, but it's like, hey, it's not in Tucson, but they passed everything else, so we'll take it. So it's good to have a partner, and thank God it's my mother that kind of steers me in the right direction. So I'm not buying everything. We're buying the correct deals that actually match our metrics. Plus, if your buy box complements what your investors want, that's even better. So you ask your investors, do you prefer cash flow? Do you prefer equity? Where do you like to invest? Like ask them. They're like, well, I like the Sun Belt states because that's what I've been hearing. Or I'm in the Southwest, I want to keep it close to home. Perfect. So it's really just honoring the buy box, number one, for specific reasons. And then number two, it's honoring what your investors want. And mom brings both perspectives to the table. And it really just helps me and also other partners just to keep on track.
Right. And mom's retired now. So that's awesome. Kudos.
Yes. Thank God. She was able to step away from her W-2. In fact, it was kind of like one of those things where we both looked at each other and said, you're pouring so much into your W-2. If you were to pour that much into the business, where would we be now? And we're succeeding, which is great, because it was like one of those things, she's not financially retired yet, but we're halfway there. She's out of Wall Street and now she's in entrepreneurship and also time freedom, which is great. Right. Now we're starting to build that financial freedom for her and others, but it's been great. So it's not like, I have to wait until she's done with her conference calls and, everything else. It's like, all right, I got you full time now. Now I can just pick your brain anytime I want. You can pester me to get stuff done. So It's been great. It's been a blessing.
All right, Michael. So what are the bigger goals for the company? Do you have like a 5 and 10 year plan at the moment?
I do. So it really stems out from the fact that I want to help as many people as I can. Now, it stems from the Starfish store. I'm not sure if you're familiar with it or your viewers are, but I'm going to quickly share it. In fact, recently we adopted this as our company motto. Kudos to mom for bringing this up. But there was a little boy on the beach and he's tossing starfish into the ocean. Now up ahead, there's a man and he's seeing all these starfish. And he sees this boy on the shore and he walks over to the boy and says, what are you doing? The little boy's like, well, these starfish are dying. I'm throwing them back in the ocean. And he's like, what difference could you possibly make? There's thousands and thousands of them. You'll never save every single one of them. Little boy proceeds to bend down, grab a starfish, throw it back in the ocean. He's like, you know what? It made a difference to that one. I kind of wordsmith it, but if we can make a difference to somebody or a family where we can give them a better investment opportunity so that they can go on vacation with their family or they can get their time back and they can really appreciate the things that matter most instead of worrying about the W-2 or something else or personal finances, that's what we want to do. Right now, we're looking at about 1,000 doors right now across the country to purchase and also take over management with. These are distressed assets, but it's building better communities, complex communities. This is a Cindy Harding philosophy. Like, we love that too, where it's like, these aren't just businesses. These are homes. These are communities. We want to unite those. We want to start building those better and bigger, number one. And then number two, it's just providing better investment opportunities. So our goals are to provide as much education as we can on, the social media front and also inside the investment world to go, hey, we get your passive, but we still want to teach you how these things operate, because I don't want you to be left in the dark where it's like, all right, thank you for your check. Bye. I'll see you in 5 or 6 years, whatever it is. Like, I don't want to do that. That's not what we want to do. So for the company, I want to say, not like a coaching program. I mean, probably eventually we will, but mainly right now it's just expanding more into more opportunities for strictly multifamily, just to keep teaching what we're preaching. It's build financial freedom through passive apartment investing, teaching people on the investment front, and also social media front, doing podcasts and stage talks, whatever. But the 5 and 10 year goal is literally just repeating what we're doing today. And that's just educating people and providing more opportunities and just helping more people as we go along and building better communities. So that's us.
Yeah, that's in strong alignment with myself. That's great. And speaking of that and the type of impact you're having on the communities as well as for your investors, how are you reaching out to them and educating them? I know you have a podcast you've been doing for a while, which is going well. So
Yep.
why don't you tell us about that for starters?
So what's funny is the origin of all of this. I was never a social media person. And now if you look at my social media, it's pretty contradictory to that statement. But I got my first phone at 16. I really was not a technology person. It just wasn't my shtick. It wasn't my niche. But eventually I got it, to be in touch with my friends and everything and so on and so forth. But when I joined multifamily, I realized, we're in the true digital age. People use social media for branding, promotion, and also the network. And I'm like, I don't do that. And I'm honored to say this. I had to look up how to make an Instagram post. Like, I actually had to Google on my laptop, how do I make an Instagram post? How do I open a Facebook account? Because I didn't have any. And then it was just, making one connection here, asking this question, going to this group, asking this question, and just started to develop there and there on from there. But then it turned from, kind of just broad education, like, what is cash flow? What is equity? What is this? To really starting to dial it into, well, if I want to retire my mom and help other people like her, what matters to them most? Is it the spreadsheets, or is it the story, or is it the pain points?
Right.
When I started to figure those out and build out my, what we call investor avatar, I got really specific and better with my social media posts. Like, all right, they don't care about cash flow. What they care about is a solution. So then I started to educate, started to build out like a marketing campaign for my email list for Facebook, Instagram, LinkedIn, and I think X as well. Could be wrong. I have to check what my CRM has, but it's basically putting it out there. So if someone were to look me up, or if they were to scroll on their page and let's say it's someone like mom and they see them, they're like, I want to do that. We can give them the option to click a link or whatever, but I digress. And then and then a podcast came along. I was like, I'm going to start a podcast because I hear everyone's doing a podcast. It's a great way to develop lead generation. Yeah, exactly like you. And it's like, what? Let's do it. And then I started off slowly, like, talking about multifamily, financial literacy, entrepreneurship, and mindset, mostly entrepreneurship and mindset, because I didn't know a lot about the multifamily financial industry yet. But then it started to go into how to do market research, how to look for these different things, what I'm seeing, kind of like a record of my learning journey through multifamily. And then I connected with Russell Gray, who's an incredible gentleman. He connected me with people like Robert Kiyosaki, Karin Hall, Adam Taggart, and all these gold, silver, and financial titans. And I connected with them, brought them on the show, and then just started to really snowball effect of just teaching people financial literacy, investment philosophy, multifamily, and just how to break from the traditional mold of Wall Street. And it's between that and social media that I look back and I go, if someone were to tell me in 2 years' time I would be doing all this, I wouldn't believe it. But those are my two biggest ways of education, is my podcast and also social media. It's like, what? Social media might not be everyone's thing, but at least go out and say something. Like, go on LinkedIn and say, like, hey, I'm doing this. I'm doing multifamily to help other people in healthcare, to, help doctors reduce their taxes in California, whatever it is. Like, use social media as a way to present your value and to publish your value. And I digress. Long story short, that is how I've been educating people, is just through social media posts, the podcast, and then one-on-one conversations, then just asking questions online and just being present.
Okay, excellent. So what's the name of your podcast?
So the name of my podcast is the Ever Forward Mindset Podcast. In fact, a little hint, my company name is Ever Forward Capital Partners. So
Okay.
it's derived from that. But Ever Forward Mindset, that's the podcast.
All right. All right. And you're approaching 100 episodes, right?
Yeah, we're going to be close to 100 episodes now. We've got quite a few coming down the pike, so it'll
Nice.
be great. We've hit a few milestones now, and it's like, holy cow, I don't know if I can keep up, but it's a blessing. It's a blessing to feel that pressure because it's like, all right, we're doing a lot of education now. We're publishing as much as we can, and we're reaching more people. So it's fun. I love it.
Okay. And as an entrepreneur, really in this space in particular, you really need to be proactive, get out there, and there's a lot of events. You've been,
Yeah.
particularly with sort of your partners you've teamed up with in different spaces. You're going to several of those still yet this year. Any in particular you want to share?
Yeah, great question. So, the one we just actually recently came from was actually in Las Vegas, Freedom Fest, hosted by Dr. Mark Skousen, who I had the pleasure of meeting at the New Orleans Investment Conference last year in November. The next event we're attending, which is coming up in 2 weeks, is Limitless Expo, which is actually going to be in Phoenix, hosted by Ken McElroy. And
They brought it back to Arizona this time?
Yep, yes, they are.
Okay.
So
Okay.
that'll be a hop and a skip and a drive away from me, and for you, it'll just be next door.
Yep.
But anyway, we'll be attending that as well. I think we'll be on Media Road to do our podcast there as well with Russell. And then
Nice.
the end of the year, towards October, towards actually Halloween week, we will be in New Orleans for the New Orleans Investment Conference, which is the longest going investment conference in the United States. And it seems interesting because it's not really multifamily, but it's more of a macro level of understanding how to invest properly. Like you have your people that do uranium, copper, gold, silver, oil. But
Okay.
if you boil it all down from all these investment options, it's really just investing smart, figuring out where we are geopolitically and also economically. And then number three, it's like understanding these big headlines that kind of dilute everything to like the actual truth. Like, for example, what are the interest rates going to look like? How does it affect this investment? How do you invest
Right.
smartly? Why you should pick this investment to hedge against inflation, to preserve the value of the dollar. Is the dollar going to collapse? You learn so much on a macro level of finances when you go to that event. It's unbelievable. I remember I left with a headache because my head was so full with knowledge. I'm like, good grief. Like I'm over here on the plate because I'm just like, I have so much knowledge. But it was really valuable because once you tie that back in the multifamily of being financially smart and savvy and outreach, well, it's not just multifamily that we invest in. There's so much more that goes into it, like the dollar. We talk about cash flow, what happens with that, interest rates, rate hikes, central banks. How does that all tie in together? So it's basically allowing you to see the bigger picture and how everything's intertwined together. But anyway, those are the events we attended and also are attending this year as well.
Okay, excellent, very cool. Yeah, I enjoy those. Often it depends, right? There's some that are more in our niche, if because you and I are both focused on multifamily, but I invest in other things as well.
Yeah.
Um, I've not, I've come close because a lot of my investors are high income investors, and they were looking for things to offset their active income, and I'm like, well, that's energy, that's oil and gas, but
Yep.
and I've vetted a lot of operators. Eventually, I'm like, I'll introduce them, but I'm not going to raise and partner with them. I've decided I'm sort of staying in my lane and trying to,
That's important.
be
Yeah.
top in
No, I
class
agree.
in that regard. But anyway, Michael Rebelo. If people would like to connect with you, learn more, where can they go? What should they do?
That is a great question. So, if you all want to connect with me, you can go to www.everforwardcapitalpartners.com. It's just my company at .com, and you'll be brought to our page. You'll be able to contact us as well. You can see the events we attend as well, as Tim brought up actually just a couple of seconds ago, and you can see everything we've done, the deals we've closed, people we've had on our podcast as well, and also a couple of free resources as well. But yeah, please feel free to follow us on social media as well. You have a couple of options: Facebook, LinkedIn, Instagram as well, and yeah, that's how you can find us.
All right. I should have asked you in the beginning. Free resources. You have a book that's popular. Is that right?
Yes. So we have a 58-page free PDF. It's very simple. It's basically, well, the title is There's More Because Retirement Shouldn't Be a Question Mark. That was the whole spark of our business was I don't want my mother's retirement to be a question mark. And I don't want other people just like her to have question mark on their retirement account. So it's basically the origin story of how we got into multifamily, how we look at multifamily deals, how we raise capital. It's basically multifamily from a 30,000 foot level view from our perspective, plus our story. So if you want to get our free book, there's a resources tab on our website as well that you can get that as well. There's a little button, I think, in the right-hand corner that says our free book as well. I could be wrong, but it is available on the website. It is free, just a short form, and then you'll be able to download it from there.
All right. Great stuff. Thank you. Thank you everyone for listening and watching. Thank you very much, Michael Rebelo, for joining me today. Very much appreciate you sharing your story and your insights into the industry.
Absolutely. It's been an honor, my friend. Thank you so much.
All right. Talk to you soon.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.